Hello, savvy investors and finance enthusiasts. Welcome back to the Investing Iguana, where we slice through the complexity of the financial world with razor-sharp insights. I'm your host, Iggy, and today, we're diving deep into a topic that's buzzing in the heart of Singapore, the intriguing world of REITs. Now, let's set the stage. Imagine a landscape where inflation is climbing and interest rates are on the rise. Tough for investors, right? But here's the twist. Amidst this turbulent environment, some of Singapore's REITs are not just surviving, they're thriving. How is that even possible? Are these REITs the hidden gems in your investment portfolio waiting to be discovered? Or is there more to the story that meets the eye? Stay with me as we unravel this puzzle and explore 5 REITs that are defying the odds, offering both stability and tantalizing yields. But before we jump in, let me ask you, do you think these REITs can weather the storm of economic uncertainty? Or are they just anomalies in an otherwise risky market? Hit the comments below with your thoughts, and let's get this discussion rolling. And if you're ready to uncover the potential winners in Singapore's REIT sector, then buckle up, because we're about to take an exhilarating deep dive into each of these fascinating trusts. Don't forget to like, share, and subscribe to stay on top of the game with the Investing Iguana. Let's get started. Mapletree Logistics Trust, SGX, M44U. Mapletree Logistics Trust, SGX, M44U, is indeed a significant player in the real estate investment trust, REIT, sector. With a diverse portfolio spread across 9 countries and assets worth 14.03 billion Singapore dollars, MLT has made its mark in the industry. In the first half of FY 2024, despite a slight dip in gross revenue and net property income, MLT's distribution per unit, DPU, managed to nudge upwards. This is a testament to their resilient business model and effective management strategies. One of the most impressive aspects of MLT is its robust portfolio occupancy, which stands strong at 96.9%. This high occupancy rate indicates a strong demand for their properties and reflects the trust's ability to maintain tenant relationships and manage their properties effectively. MLT's financial strategy is indeed sound, characterized by a low debt cost. As of September 2023, MLT had a total debt of 6.40 billion Singapore dollars, and their total liabilities were 7.18 billion Singapore dollars. Their financial health is further evidenced by their net income of 100.35 million Singapore dollars and a net profit margin of 53.75%. Moreover, MLT's earnings are forecasted to decline at 3.5% per annum, while its annual revenue is expected to grow at 6.2% per year. The return on equity is forecasted to be 5.8% in 3 years. Mapletree Logistics Trust, SGX, M44U, is a highly recommended REIT for several reasons. Firstly, it boasts a diverse portfolio spread across 9 countries, providing a broad exposure to different markets and reducing geographical risk. Secondly, it has a robust portfolio occupancy rate of 96.9%, indicating strong demand for its properties and effective tenant management. Thirdly, despite a slight dip in gross revenue and net property income, MLT's distribution per unit, DPU, has shown resilience, nudging upwards. Lastly, its sound financial strategy is characterized by a low debt cost, further solidifying its position as a stable investment. These factors, combined with its assets worth 14.03 billion Singapore dollars, make Mapletree Logistics Trust a compelling choice for investors seeking steady returns in the REIT sector. CapitaLand Ascendas REIT, SGX, S17U, often referred to as CLAR, is indeed an industrial giant in the real estate investment trust, REIT, sector. As of June 2023, it held a portfolio valued at 18.40 billion Singapore dollars. This portfolio is spread across 4 key markets: Singapore, Australia, the United States, and the United Kingdom, as well as Europe. It comprises new economy assets such as business spaces, life sciences, logistics and industrial properties, and data centers. In the first half of 2023, CLAR did show a promising increase in gross revenue. The revenue rose by 7.74%, which is a testament to their effective management strategies and the resilience of their business model. One of the most impressive aspects of CLAR is its robust portfolio occupancy. As of March 31, 2023, CLAR's overall portfolio occupancy stood healthy at 94.4%. This high occupancy rate indicates a strong demand for their properties and reflects the Trust's ability to maintain tenant relationships and manage their properties effectively. Recently, CLAR has indeed expanded its footprint with strategic acquisitions. It acquired Seagate Singapore's Integrated High-Specification Research and Development (R&AMP Winking and Laughing) facility, The Sugared, for 218.24 million Singapore dollars. This acquisition, located at 26 Air Raja Crescent in One North, Singapore, deepens CLAR's footprint in the area. CLAR's financial strategy is sound, characterized by a low debt cost. As of June 2023, CLAR had a total debt of 7.90 billion Singapore dollars. Their financial health is further evidenced by their net income of 186.22 million Singapore dollars and a net profit margin of 51.85%. CapitaLand Ascendas REIT, SGX, S17U, or CLAR, is a highly recommended REIT for several compelling reasons. Firstly, it has a diverse portfolio spread across 4 key markets, providing investors with broad exposure and reducing geographical risk. Secondly, its robust portfolio occupancy rate of 94.4% indicates strong demand for its properties and effective tenant management. Thirdly, despite market fluctuations, CLAR has shown resilience with a promising increase in gross revenue. Lastly, its strategic acquisitions, such as the recent purchase of The Sugared in Singapore, signal a commitment to growth and expansion. These factors, combined with its sound financial strategy and assets worth 18.40 billion Singapore dollars, make CapitaLand Ascendas REIT a solid choice for investors seeking steady returns in the REIT sector. Let's now dive into the fascinating world of Keppel DC REIT, SGX, AJBU, a real estate investment trust that specializes in data centers. This futuristic choice is not only a leader in its field but also a global player with a portfolio of 23 data centers spread across 9 countries. In the first 9 months of 2023, Keppel DC REIT saw a rise in both gross revenue and net property income, NPI. The gross revenue increased by 2.6% to approximately 211.1 million Singapore dollars. The NPI also saw a growth of 2.5%, amounting to around 191.9 million Singapore dollars. These figures indicate a robust financial performance, demonstrating the REIT's ability to generate consistent income. One of the key indicators of a REIT's performance is its distribution yield. For Keppel DC REIT, the distribution yield is approximately 5.68%, which is quite attractive for investors seeking regular income. Another important aspect that underscores its stability is the weighted average lease expiry, WALE. The longer the WALE, the lower the risk of rental income being affected by market fluctuations in the short term. Keppel DC REIT boasts a long WALE of 7.8 years, providing a stable flow of rental income for a considerable period. Lastly, let's talk about occupancy rate. A high occupancy rate generally indicates strong demand and effective property management. Keppel DC REIT maintained a high portfolio occupancy rate of 98.3% as of Q3 2023. This high occupancy rate is a testament to the Trust's strong tenant base and the growing demand for data center spaces. Keppel DC REIT, SGX, AJBU, is a highly recommended REIT for several compelling reasons. Firstly, it specializes in data centers, a sector that is poised for growth given the increasing reliance on digital technologies and data storage. Secondly, its diverse portfolio of 23 data centers across 9 countries provides broad exposure and reduces geographical risk. Thirdly, it has shown solid financial performance with a rise in both gross revenue and NPI in 9M 2023 and offers an attractive distribution yield. Lastly, its long weighted average lease expiry, WALE, and strong occupancy rate underscore its stability and resilience. These factors make Keppel DC REIT a futuristic and potentially rewarding investment choice in the REIT sector. For the fourth REIT, we are looking at Frasers Centrepoint Trust, SGX, J69U, a retail-focused real estate investment trust, REIT, that has shown remarkable resilience in FY 2023. With a 3.6% increase in gross revenue, amounting to approximately 369.7 million Singapore dollars, FCT has demonstrated robust financial performance, reflecting its ability to generate consistent income. FCT's portfolio is quite impressive, consisting of 11 retail malls and 1 office property, all located in Singapore. These properties are strategically located in various established residential townships and have a large and diversified tenant base, covering a wide variety of trade sectors. This strategic positioning has allowed FCT to maintain a high occupancy rate of 98.7%, which is a testament to the trust's strong tenant base and the growing demand for retail spaces. Now, let's add some spice to this discussion with some intriguing facts. Did you know that FCT's shopper traffic reached about 50% to 60% of pre-COVID levels between July 2021 and September 2021? Moreover, the portfolio tenant sales for the same period were at 93% to 98% of pre-COVID levels. This significant recovery in shopper traffic and robust growth in tenant sales paint a promising picture of recovery and growth in the retail sector. FCT's financial strategy is also worth noting. It has been actively taking steps to reconstitute its portfolio by divesting its non-core interests and redeploying the proceeds to repay debt. This strategy has not only boosted its financial position but also set the stage for better positive rental reversions. Frasers Centrepoint Trust, SGX, J69U, is a highly recommended REIT for several compelling reasons. Firstly, it specializes in retail properties, a sector that has shown resilience and recovery, especially in the post-pandemic era. Secondly, its diverse portfolio of 11 retail malls and 1 office property in Singapore provides broad exposure and reduces geographical risk. Thirdly, it has shown solid financial performance with a rise in both gross revenue and NPI in FY 2023 and offers an attractive distribution yield. Lastly, its high occupancy rate and significant rise in shopper traffic and tenant sales paint a picture of recovery and growth in the retail sector. These factors make Frasers Centrepoint TR. Lastly, let's look at Mapletree Industrial Trust, SGX, Me8U. Mapletree Industrial Trust, SGX, Me8U, often referred to as MIT, is a noteworthy player in the real estate investment trust, REIT, sector. It has a diversified portfolio of properties spanning across Singapore, the US, and Japan. In the first half of FY 2024, MIT has indeed seen a slight growth in gross revenue. This growth is a testament to MIT's robust business model and its ability to generate consistent revenue, even in challenging market conditions. One of the key strategic moves by MIT recently was its maiden acquisition of a data center in downtown Osaka, Japan. This acquisition, valued at approximately 505.9 million Singapore dollars, marks MIT's first foray into Japan's data center market. The deal was financed through a mix of JPY debt and equity fund raise, EFR, and it also involved refinancing of existing Singapore dollar to US dollar debt by additional JPY debt. This strategic acquisition not only expands MIT's geographical footprint, but also diversifies its income sources. In addition to its expansion in Japan, MIT has also seen positive rental reversions. Rental reversion is a key indicator of a REIT's ability to grow its rental income over time. In 1Q FY24, MIT achieved a positive rental reversion of 5.3% for its renewal leases. This indicates that MIT has been successful in renewing leases at higher rental rates, thus increasing its rental income. Now, let's make this intriguing for the YouTube audience. Imagine this: MIT's portfolio includes 56 properties in North America, 85 properties in Singapore, and 1 property in Japan. That's a total of 142 properties. If each property was a city, MIT would be a country larger than Japan in terms of the number of cities. Moreover, the data center that MIT acquired in Osaka is not just any ordinary building. It's a state-of-the-art facility with a power capacity of more than 10 megawatts. To put that into perspective, that's enough to power about 10,000 homes for a year. Mapletree Industrial Trust, SGX, ME8U, is a highly recommended REIT for several compelling reasons. Firstly, it has a diverse portfolio of properties across Singapore, the US, and Japan, providing broad exposure and reducing geographical risk. Secondly, it has shown solid financial performance with a slight growth in gross revenue in 1H FY 2024. Thirdly, its recent strategic acquisition in Japan and positive rental reversions indicate its strategic expansion and solid market positioning. Lastly, its focus on the industrial sector, particularly data centers, makes it a future-ready investment in line with the digital transformation trends. These factors make Mapletree Industrial Trust a solid choice for investors seeking steady returns in the REIT sector. In conclusion, the world of REITs offers a plethora of investment opportunities, and the 5 REITs we've discussed today, Mapletree Logistics Trust, CapitaLand Ascendas REIT, Keppel DC REIT, Frasers Centrepoint Trust, and Mapletree Industrial Trust, stand out with their impressive yields of 5.5% and more. Each of these REITs has demonstrated resilience, strategic growth, and robust financial performance, making them unmissable investment opportunities in the Singapore market. Whether you're drawn to the logistics sector, the retail industry, the digital world of data centers, or the industrial sector, these REITs offer a diverse range of investment options to suit your preferences. Remember, investing in REITs is not just about the potential financial returns, it's also about contributing to the growth and development of these sectors. So, take a closer look at these REITs, and you might just find the perfect fit for your investment portfolio. Happy investing!